It's been a challenging week for financial assets. The crisis around Deutsche Bank hit risk sentiment heavily as it reminded many of the Lehman Brothers bankruptcy 8 years ago. Now, for the moment, it appears that the stress in the markets remain at sustainable levels. There is no issue with the liquidity, yet a potential risk of contagion. Should confidence be well managed, there should be no serious issues regarding the financial space. This being said, let's move on to the major macro news that we will be watching next week. On Monday, manufacturing PMIs across the globe will be in focus. Given that China will be closed next week due to the bank holiday, the Chinese PMI was released on Friday. The manufacturing PMI in September printed an unexciting read of 50, which was in line with expectations. In the UK, manufacturing activity may have grown at a slower pace in September, according to the consensus of 52.1 versus 53.3 previously. So sterling, gilts and UK-focused stocks will be one to watch on Monday, having rallied last month following the manufacturing PMI release. Now, UK data keeps on surprising the markets on the upside at the moment. Released on Friday was second quarter GDP, which grew at a better than expected pace of 0.7% quarter on quarter versus 0.6% expected. Any positive surprise of this could give a positive spin to the pound, which failed to convince buyers above the 130 level against the US dollar last week. The critical resistance stands at 131.16, while the critical short-term support is eyed at 129.15. If broken, it could encourage a further sell-off in cable towards the 128.65, 128.40 area. On Tuesday, the Reserve Bank of Australia will announce its policy decision and is expected to maintain the status quo at 1.5%, seeing as the bank has cut rates 2 times in the past 5 months. Given risk of trading across the markets, we could expect a short-term bearish reversal in the Aussie dollar against the US dollar, regardless of the RBA's rhetoric, as the carry appetite deteriorates. Last but certainly not least, in the US, the jobs data will be in focus on Friday. Now, it will be the first of several key data releases between now and the Federal Reserve's December meeting that could offer some clues on the timing of the next interest rate hike. Non-farm payrolls increased just 151,000 in August, shy of the 180,000 forecast. 175,000 is the magic number expected by the market for September's report. Now, given the tensions currently surrounding Deutsche Bank, depending on the global risk appetite, even a solid jobs data out of the US could be insufficient to revive the Fed hawks. Now, that's your wrap up for now. Remember, you can stay up to date with all the latest market news and analysis online at www.lcg.com/analysis for daily articles, videos, and lots of educational content too. In the meantime, have a great weekend all, and goodbye.